Hey everyone. As we head into this quiet Sunday, November 30th, the dust from Friday's trading session is still settling, and investors are left trying to make sense of what exactly happened with DataVault AI, ticker symbol DVLT. The stock wrapped up Friday at $2.03, slipping by 10 cents, which translates into roughly a 4.7% decline for the day. While that drop may sound like just another routine pullback in a volatile microcap stock, the underlying behavior tells a much more complicated story. Even the small after-hours dip to 2.02, barely a penny lost, reveals something subtle but important. Traders simply weren't eager to hold their positions heading into the weekend. In other words, confidence feels fragile. Now, a one-day drop of 4% isn't unusual on its own. Stocks in the microcap tech and AI sectors routinely move by far larger margins. But if you actually look deeper into Friday's intraday action, the picture shifts dramatically. The stock opened the day near $2.11, surged quickly to a peak around 2.24 within the first hour, pulling in momentum traders who tried to chase a breakout. And then, it started a slow, almost painful slide downward. Hour by hour, the stock surrendered gains until it eventually closed near the low of the day. This intraday pattern is what seasoned traders call a pop and drop. A fast spike early in the session that reverses sharply leaves many traders trapped at higher prices. These bag holders from Friday morning will likely play a crucial role in what happens when trading resumes on Monday. If fear takes over, they might rush to exit their positions, potentially dragging the price lower to retest the 1.94 support level. If that support zone holds strong, DVLT could stabilize. Otherwise, the stock may break down even further. But price movement is only the surface of the ocean. The real current underneath is what matters most. And what's happening inside DataVault AI is far more dramatic than what casual spectators might assume. Right now, the biggest force shaping DVLT isn't just market volatility. It's the enormous gap between expectation and reality, two forces constantly battling for dominance. On one side is the expectation many skeptical investors are clinging to, that DVLT is simply the next struggling small-cap company trying to rebrand itself under the AI umbrella, so investors will stop asking questions. For people familiar with past small-cap history, this skepticism isn't unreasonable. After all, this company used to be Weiss Technologies, a modest hardware manufacturer that never gained major market traction. For a firm like that to suddenly call itself an AI-driven data monetization platform, naturally, many assume it's just a superficial makeover designed for hype. However, this is where the narrative takes an unexpected turn. The reality of what DVLT has been doing behind the scenes is surprisingly substantial. Rather than being just another company adding AI to its name, DataVault is carrying out a complete structural transformation. It has been aggressively forming partnerships and signing revenue-bearing agreements. Not theoretical projects, not vague press releases, but actual contracts. Within the last 2 weeks alone, DVLT has publicly announced partnerships that revolve around tokenizing real-world assets, linking traditional resource-heavy sectors with modern blockchain functionality. Deals involving geothermal energy tokenization with Triton. Geothermal and resource digitization initiatives with MTBE mining are not small ideas. They're concrete steps that can bring in real revenue. These deals represent the merging of physical industrial assets with the liquidity and flexibility of blockchain systems. If DataVault succeeds even partially in bringing traditional commodity sectors into the tokenized digital economy, its current market valuation might someday look comically low. But markets rarely price the future accurately. They price fear and uncertainty, and this tug-of-war between expectation and reality fuels the volatility currently visible on DVLT's chart. Now let's rewind to the sharp 18% price climb earlier this week, which many investors still haven't fully understood. A huge part of that upward spike was related to a high-profile partnership with the World Boxing Council, WBC. On the surface, this might look like a flashy sponsorship deal designed to attract hype. But when you peel back the layers, there's something strategically deeper. This collaboration gives DataVault access to live sporting events through 2026, enabling them to deploy tools like ADO and VerifyU, systems designed to authenticate and monetize fan interactions. This isn't just marketing. This is data extraction and tokenization. And sports data, particularly engagement analytics, has become incredibly valuable in recent years. If DVLT can turn real-time fan engagement into tokenized, verifiable, sellable data products, they've just stumbled into a lucrative field with global demand. But let's pivot now to the elephant in the room: short sellers. Whenever you see a stock rocket from 25 cents to over $4 in under a year, you attract short sellers, and DVLT has now become a full-blown battleground stock. Borrow fees for shorting DVLT have spiked significantly, indicating a shortage of shares available to short. When borrow fees rise, it means many traders are aggressively betting against the stock. However, this also sets the stage for a potential short squeeze, where any major piece of positive news forces shorts to buy back shares, causing the price to skyrocket. But buyers must be careful. At the same time that shorts are piling in, there has been notable insider selling, particularly from Skylark's holding, which offloaded over 400,000 shares recently. Insider selling during rallies is rarely meaningless. It suggests they may be using recent hype to secure liquidity. Add to this another twist: Skylark's has been funding DVLT through Bitcoin-backed transactions, linking the fate of the company to cryptocurrency market movements. That adds volatility on top of volatility. For long-term investors, the key metric to watch is days to cover, the number of days it would take for short sellers to cover all their positions. If it stays under 2 days, shorts can easily escape. But if it rises above 4 or 5 days, especially while the price trends upward, the conditions for a squeeze become statistically compelling. Speaking of compelling, we must talk about the unusual Dream Bowl 2026 token distribution, where DVLT plans to reward shareholders with a meme coin airdrop. In older financial eras, this would have been mocked. In today's market, where digital assets, memes, and online investor communities influence behavior, this strategy is shockingly effective. By giving shareholders a digital token, DVLT essentially creates a digital dividend, encouraging holders to stick around long-term rather than selling early. Investors don't want to miss out on the airdrop, which artificially supports the price floor. But while the crypto-adjacent hype builds, the technical picture shows increasing fragility. Friday's failure to stay above $2.10, a psychological support zone, indicates waning momentum. The next major support level sits around $1.90. If the stock falls below that with heavy volume, the bearish narrative takes control, and DVLT could retrace sharply to the $1.50 region, where it traded before this whirlwind of announcements. As Monday approaches, traders should watch for large bid walls around the 2.00 level in Level 2 data. If institutional players defend that price, it signals confidence. If bids are thin or scattered, it means the stock might drift lower. Zooming out, DVLT sits at the intersection of several of the hottest and riskiest sectors in modern finance: AI, tokenization, blockchain, sports analytics, and energy commodities. This everything-everywhere positioning gives DVLT access to massive liquidity waves, but it also introduces identity confusion. Markets dislike companies that try to be too many things at once. So the ultimate question becomes, is DVLT an emerging AI blockchain powerhouse? Or is it a microcap experiment that's stretching itself too thin? Right now, the market hasn't decided, and that indecision is exactly what is creating the wild swings we're seeing. This is not financial advice.